Hey traders, Raghee here, and in this free video I want to run through the four broader averages and talk about market structure. What you have in front of you is a really great basic no-nonsense chart that will give you a crystal clear reading of the underlying market trend that we have right now, and we're going to go through the Russell, the Nasdaq, the S&P, and the Dow. Now I'm going to start with the Russell because while I am still bullish the other averages, the Russell is the one market that we are actually fading. Now fade means we have, number one, a sideways market, which I believe we have. It's really a distribution market we see. That means when I get up to the high zone here, as opposed to what's likely to be the low zone down in here, I'm looking at buying puts, or I'm looking at a short position. And that's exactly what we've been doing between 1600 and 1580, 1585. So there's your short right there. Now some traders, and let me mention this because a lot of traders watch these videos might say, but Raghee, this looks really interesting. I don't trade futures. We don't trade just futures. What we do is we look at the market from a perspective of futures trading. We look for connected, correlated stocks and sectors to the futures. We look to stocks that are sensitive to commodities movement. So, for those of you that are taking a trial in the site, remember, this is not just about futures trading, but how we trade from a futures perspective. So, kind of flip this around for a moment. A lot of traders tell me, well, Rod, can we trade the underlying ETF? Absolutely. In fact, what I recommended to most traders, because the options chain on the Russell is relatively thin, and the volatility in this market, think about FOMC, non-farm payroll, we knew about that on Monday. In that environment, it makes a lot of sense to use an asset class like options that allow you to define risk and handle volatility differently than the underlying. In other words, the RTY futures themselves. IWM just has a more liquid option chain than RTY futures. Nonetheless, six of one, half dozen the other. How you want to build your short is really going to be predicated in many ways on how you control risk. Big conversation we've been having the last couple months in the room, and if you haven't already seen it, we are going to have a webinar next Thursday on this topic. And you can register at simplertrading.com/trend. And this is really the missing link for a lot of the traders in my room, in the futures room, where they tell me, Rog, it's the position sizing, it's the risk management that's making the difference. And a lot of traders are reporting how much better they're doing by understanding how much, not too much, not too little, you're supposed to commit per trade, per theme, depending on your account. So come check it out, simplertrading.com/trend. All right, so next up, let's take a look at the ES, because unlike the RTY or the IWM that we're short right now, we have an open short in the room, I'm still bullish the S&P, I'm still bullish the Nasdaq, and I am still bullish the Dow. Again, look at the structure of the market. Unlike the sort of meandering sideways market we saw in the RTY, ES, NQ, YM, they're only looking at one, maybe two green, the transition from green to blue to red, so one or two red or blue grab candles. That is not a trend, but it is breaking the previous uptrend, putting us into a choppy market. When you transition into chop after an uptrend, keep a bullish bias. Don't go to stop and reverse. Please avoid that. And we'll continue to manage these long positions into next week. In the premium video, we'll talk more about the individual positions that are kind of related to this YM. And we'll talk about a lot of these individual stocks next week. All right, gang, I'll see you in the next update.